Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader, here with your Cabot Weekly Review, recording this late Friday morning, almost noontime here on Friday, the 13th, September 13th, although it's a beautiful day here in Massachusetts. So last week was very discouraging. This week, just as encouraging. We've snapped right back, as I'll show you in a bit. We've almost had sort of over-the-top weekly moves, meaning, obviously big down last week, but now heavier volume recoveries this week and a lot of indexes and obviously stocks. So that's encouraging. Now, with that said, it's kind of two different thoughts at the same time. Top-down perspective, I think that the correction that started, say, in mid-July for the big cap indexes, or really in March for a lot of the market, is still ongoing. Call it a correction, call it a consolidation, call it a bottoming process, whatever you want to call it. We're still in kind of this up and down environment, range bound, and even more than that, themes kind of come and go every week or two. Defensive stocks look good, then they get hit. Rate-sensitive stocks get hit for 2 weeks. Now they're strong today. It's a lot of that sort of topsy-turvy action. What's most encouraging, and we talked about this a lot last month, is a lot of, it's not 200 or 300 stocks, but there's a lot of stocks, mostly on the growth side of things, that reacted well to earnings after the August 5th panic low. Some of them got a little wobbly here or did break, in my opinion, last week. But most of them held firm, and then as soon as the pressure comes off the market, boom, they just right back to new highs. And some of them are soaring and breaking out on huge volumes. So it's not 1999 out there. I'm not trying to make it sound like that, but there's a lot of names that, to me, look like they're battling for pole position, so to speak, for the next advance. Now, if that advance starts right now and we get going, I'm all for it. If it starts in 4 weeks or after the election or whatever, you still have to be, in my opinion, somewhat cautious, somewhat careful, smaller positions and all that, because good stocks, as we saw last week, good stocks can still go bad in a hurry in a tricky environment, okay? So in Cabot Growth Investors model portfolio, we never got, heavily invested. We were like a third in cash, back up to, not a half, but close to a half. We put a little bit of money to work this week. We're now in like the low 40% cash. We like everything we own. It's all acting very well, which is a good spot to be. So hopefully we can kind of keep extending our line slowly and have, positions in these potential and real leaders. And then when the market gets going, boom, we're heavily invested in a bunch of leaders. That's the goal. But we'll see how it plays out. So right now, I would just say what I would just describe it as cautious but optimistic, okay? Optimistic that the next big move is up and that some of these stocks are starting or close to starting big runs, but still cautious because the market, at least looking at the evidence, isn't quite proven on the upside and still range bound and still choppy and tedious in a lot of ways, okay? All right, let's hop into the charts. As usual, I'm using a program called Market Surge, product of Investors Business Daily. You can learn more at marketsurge.com, okay? So this is the NASDAQ, and you can just see the last three, since Wednesday, it's been great. I mean, it's been up every day, but really since Wednesday, it's been great. But stepping back again, you're kind of, as of last week, this was, you're 80% of the way, I think I mentioned, down in the range, right? In this sort of range here, you were 80% toward the bottom. Now you're, I don't know, probably 50% or 60% on the way up, but, somewhere in the middle, okay? What am I trying to say? It's still in a range, okay? Now, ideally, we come in next week or the week after and we're okay, and I'm all for it. But you just have to kind of go with what's there. It's good that we're above the moving averages, but I think just not leaving your brain at the door, it's kind of range bound. Now, other stuff looks better, like here's the S&P 500. Okay, certainly near new highs. That's good. Okay, so I wouldn't say that's bad, but more on the growth side of things, it's still range bound. And also in the broad market, okay, this is small caps, IWM. Okay, again, good 3 days, but just kind of stepping back. It's nothing decisive. I mean, we started the month up here, and like this is the MNDY we're looking at now, mid caps. So we started the month up here, we went way down, we've come back up, but on the month, mid caps are down 1.7%. So, you're not looking at something where you're like, wow, the intermediate term trend has just turned clearly up. It's a buying panic. Now, give me another week like this week, and we'll be talking, okay? But you could have said that at the end of August too, and instead we saw selling. So that's just kind of what I see, okay? The other thing I just wanted to mention was, so if you look at the NASDAQ, and this is a little inside baseball, and it could change next week. But what I would say is when you're in kind of a consolidation or correction, and then you have sort of a very bad week. Last week, the NASDAQ was down 5.8%. Volume was light. It was a 4-day week, after the Labor Day holiday, but still, pretty bad week. This week's kind of, sometimes we call it over the top, but it's kind of over the top volume. It's not an outrageous volume in the market this week, but it's higher volume. And more important to me is the NASDAQ, as I record this, it's up 6%. It's kind of swallowed up all those gains. In other words, all the people who sold last week, who shorted last week, who got bearish last week, are kind of like the tide quickly went out and they didn't have any bathing suits on like real quickly from a short-term perspective, right? So you're kind of, it has sort of a shakeout feel to it, I guess is what I'm trying to say, okay? And you're seeing some of that elsewhere, like chip stocks. I'm still not, these have been, we talked about it, they've been very well played and had a big run in the last 15 months. But at the same time, you do kind of have that, call it an outside week, whatever, but just sort of over the top action in the sector that looks like more of a shakeout. Okay, I do like the fact this week it's been good for growth stocks. This is the IPO fund, not the be all end all. It's just something I watch in terms of glamour, risk on, measure, that sort of thing, and it's kind of back to had this pullback. It had obviously the mini crash, and then this pullback. Pretty tame compared to the prior two held moving averages, now attacking its prior highs. And then the equal weight NASDAQ 100, this is QQQE, which, like I said earlier, most of the market, growth stuff and all that, a lot of it topped out sort of February, March, for the most part. There might have been some churning we talked about back then, but it really hasn't gotten above this 90 level except for a few days here in July since that period of time. And again, you've kind of had these incessant pullbacks and pullbacks and pullbacks, and now it's attacking the top of the range again. Still down for the month, by the way, but we'll see how it goes. So, it's just encouraging action, okay, when you look at it from the top down perspective. But at the same time, again, this is QQQE, you're just kind of in this range. Maybe next week we're back down here. Maybe we go up here again and then come back down. Until you leave it behind, it's hard to conclude that a good week is that meaningful, right? We're still kind of in this ping pong environment, okay? Before we get into stocks, because there's a lot, I did just want to mention, so XLP took a little bit of a hit, but again, defensive stocks back at new highs, okay? XLV not as good. XLU is what I wanted to mention. XLU, new highs. The Dow Industrials, pretty much new highs. So, don't get me wrong, growth stocks have done great this week, but we're still seeing plenty of buying for sort of the safe stuff out there. So let's just see how things play out. I wouldn't say, if we come in next week, I was kind of hopeful this day right here, at one point the XLP was down a few percent. We come in next week and XLP is down here and the NASDAQ's up. I think that would be a little bit of a better sign, and maybe you start talking about intermediate term trend change. But right now it's more like, hey, it's been a good week. There's a lot of positive action, but nothing conclusive. Now, like I said, the most encouraging thing is just, I'm just ripping through some stocks. Just, this is AppLovin. Now, you're not early in this one, but, it's kind of had this multi-month, 3-4 month structure in here. It had a great recovery, shakeout recovery after the little mini crash, but you can just see net from beginning of May, early May to early September. So what's that? Yeah, 4 months, 1, 2, 3, 4 months. No progress. And then upgrade or whatever this week, and just, that does look like 1999, okay? Huge breakout, huge volume day after day. We'll see where it closes today, okay? Shark Ninja, we've mentioned before, this isn't as dynamic, but gaps on earnings, like no pullback. And then as soon as the pressure comes off the market, it goes from 95 to 103. Again, it's not like a dynamic stock. It's a consumer products company, but just the pressure comes off and it goes higher. This is ServiceNow. It's down a little bit today, and it's not as dramatic, but just I write about this in the free Wealth Daily if you want to check it out on cabotwealth.com. But, the market top was around here. In fact, you can kind of see it here. Here's the market. This black line is the S&P 500 just. And you're going to see, gaps up on earnings. Yes, it got hit briefly during the August meltdown, but you're going to see it's been just kind of toying with new highs. Now it moved out to new highs. Not a lot of dramatic volume, but just kind of wants to go higher ahead of the market. Even the S&P 500, certainly stronger than the NASDAQ too. And, as soon as the pressure comes off, it goes from, call it 820. So call it 82 to 88 just real quick this week, okay, for kind of a big cap emerging blue chip type of name, all right? So we'll see how it goes, but there's a lot of action like that today, and we're just running through names here. Toll Brothers, so rate sensitive stuff. Home builders all broke out here and kind of pulled back, up, down, but net, few weeks of no progress, hit the 25-day line. Now they're strengthening, okay? Rocket companies, Rocket Mortgage, RKT, okay, big volume push here, and now, a pullback. Normal, no, not huge volume or anything like that. I think I mentioned it last week. Now it's popping. This was in top 10. Zillow, there's some overhead here. If you look at the weekly chart, it's kind of like up here, but still it had this normal pullback. This is symbol Z, by the way. Kind of a normal pullback 25-day line, and now accelerating higher. Even like Carrier, for ACs, HVAC, ventilation, again, you're starting to see some things stretch their legs, and again, you kind of had these stocks get hit. This is just Carrier, which isn't the most dynamic name, right? But this was the August low, and while the NASDAQ and even the S&P didn't quite make it to new highs, you had a lot of stocks that did, and then they got hit a little bit, and now they're kind of racing to new highs again as soon as the pressure comes off the market. So we'll see how it goes. Maybe it pulls back again, but we're seeing a lot of that, okay? Some bull market stocks are setting up. So this is Interactive Brokers, IBKR. Okay, again, you kind of have these, a lot of these stocks they topped in, this one probably topped in May. Yeah, a lot of bull market stocks kind of topped in May. And so you had this, again, kind of like AppLovin, 4-month structure. Pretty clean, looks like 130s kind of resistance. Maybe it's going to get going today, we'll see, but looks pretty good. KKR, of course, has been kind of the leading private equity sort of player out there this cycle, this up move since last November. Very slow, looked great, fell off a cliff, came back, pulled back, 50-day line, overall. But again, a couple of good days. There's more and more stocks that I would say, hey, you give me, maybe not a day or two, but, give me a good week or, something like that. And like, whoa, this thing's breaking out, looks great. That sort of action, okay? KKR is a little bit of an odd structure, but there's no question about the relative strength, okay? Shift4, name I've liked for a while, and it had this big volume. We mentioned it here. It's kind of had this, I don't know, however the hell long that is, a year or whatever, up and down and tedious. And then you had these 2 big volume accumulation weeks after earnings. Again, you have that shakeout last week, like we were looking at in the major indexes. And then you have this sort of, I guess maybe you don't have over the top volume. So maybe it's been light volume, but the price action is very encouraging. And just to be able to kind of snap all the way back here, it actually ticked new price recovery highs anyway. That looks pretty good. But TOST is another one, TOST. You just look at this and the stock is basically, you can go way back on the weekly chart, but even more recently, clean that up. This is TOST, it's just been consolidating here since, again, I think that was early May, up, down, kind of 200-day line. This is the 40-week line caught up, and now the stock is popping on higher, not overwhelming volume. And again, you're kind of like, hey, a couple of good days or a good week, all of a sudden you're hitting whatever, 2-year highs in the stock or whatever it is, something like that. Just a random list of names. So GE, this was interesting too. GE, this is GE Aerospace, symbol GE. It's actually got pretty good growth story. It's not like the old company. And you can see, again, not to repeat myself, but early May, 4-month dead period. Tried to get going on earnings, got pulled back by the market, ran all the way back to new highs, then got whacked last week when Boeing got whacked. Not to keep on the storytelling front, but here's Boeing, okay, same day when it, Boeing's been a mess for a while, but that dragged down the group. And now it's just kind of that, again, when I'm talking about this sort of shakeout feel, wow, that looks kind of like double toppy, not so good, but there was no volume, but not so good on the price, and then boom, right back, pretty much to new highs here today. Looks pretty good volume, encouraging. Monday.com, this one came close. We have this in top 10, and I almost sold it because I almost stopped this out. And I'm not saying it's free and clear, but again, you kind of have this consolidation here, breaks out, tests you. So net, the stock really hasn't done much for many, many months. And now it's trying to get going. Looks a little bit cleaner on the weekly chart. Again, nice snapback here. Halozyme, HALO. This one's been, to be fair, this one did break out. I think it was 19 weeks ago. I was looking at it earlier. So here's one test of the 50-day line and almost another one here, 10-week line anyway. My guess is it's not, who knows? I don't know. Maybe it goes straight up. My guess is it might need a little time, but either way, this is kind of an early, what we call sort of just an early stage pullback resumption pattern where you get a nice trend, pulls back normally, hangs around a few days, sector goes out of favor, starts to resume. Might need some more time, but overall, obviously looks pretty good. And there's even some of this off the bottom stuff. This is Shopify, not something I'm going to play with necessarily, but just a dramatic, wipeout basically here. and recovery on earnings. This was last month during the mini crash. It did kind of come in, but look at these last 2 weeks of volume. Yes, I know it's Labor Day, end of the summer, but that's, go back and look. I mean, this week right here was lower, but that's like low, and now it's starting to come up, not on dramatic volume, but certainly heavier than last week. And again, you're just kind of looking at it like a good week or two, all of a sudden you're out to multi-month highs, okay? And just a similar thing. This is Dynatrace, DT. Again, I'm not a big off the bottom guy, especially these days. I'd rather go with the stuff that's looking really peppy. But there's no question some of these things have died over many months, had a dramatic, turnaround on earnings, and just changed character. I mean, not that it was very tight in here, but just very, very tight you can even see on the daily chart, just kind of a nice little tight pattern here. So, again, it's not my sort of pattern, but there's no question that the stock looks to have changed character. And if the market, keeps going higher, some of these off the bottom names can have good runs, okay? So back to the market. So then, I kind of get, there's a lot of stocks I start reading about, man, these things look good. Like you kind of want to just buy. And then you kind of come back in here and you just know like there's a lot of stuff that look good here and we pulled back. Now that we're coming up again, I feel better about it because this shakeout clearly, I wouldn't say it got everyone negative, but short-term sentiment definitely got damaged a little bit with that pullback. So it feels a little bit better, and I'm not ruling anything out. Maybe we go, maybe we don't. But until we just see more, even the things I mentioned, like some of the, this is Interactive Brokers, which I just mentioned. It's a great setup. Has it broken out? No. Has it followed through from a breakout? No. All that stuff. Not to mention all the stuff the market has to deal with. Fed is next week, election, all this stuff. So we're still, to me, at least on the growth side of things, we're still in kind of a trading range. I do see, I wouldn't say more and more, but I see plenty of encouraging action. And I think I don't want to be 100% cash or whatever. But, I'm not really going too far forward because, honestly, a bad day or two from here, a lot of stuff that's hitting resistance and backs off, that's going to look a little iffy. So I'm still favoring small positions in high relative strength names out there with good stories, trying to get pretty good entry points. And like I said, if and when the market can kick into gear, whether it's now, that would be great, or 2 weeks from now, or 6 weeks from now, whenever it is, the goal is to own at least a few of the leaders at that time, and then hopefully go on a big year-end run from there. We'll see how it goes. Okay, that's all the time I have for today. Thanks for listening. And as always, come by again next week for another Cabot Weekly Review.